Can you hear me now?
Yeah, hello, can you hear me?
Yeah, can you hear me?
Yeah, I can hear you. How we doing?
All right. Sorry about that. I never did the Zoom live stuff.
It's all good. It's all good. But yeah, we right now we currently killing SPY, the NAS 100, and yeah, we had a good day today. How's your day so far?
I did pretty good this morning. Once Pal started speaking, I waited for the. I was doing QQQ at the time, and I waited for it to hit my demand spot, and I got about $18 in 3 minutes.
You said 18?
Yeah, 18.
Yeah, that's good. That's good. 18 is 18, right? You got a +1. You got a +1 for the day. You're green for the day. You know that's the most important.
Yeah, my biggest issue is I can't scout because
You said you can't scalp.
I can't do them real quick trades. The only reason I was able to do it today is because I'm off work, but I have to go to work at because I'm California time, so I have to be at work at 7:30. So I have a good 30 minutes, but that's it drives me crazy trying to look at my phone while I'm working.
Okay.
So I was wondering what's the next is it day trading?
Yeah, so day trading, scalping, or swing trading. But since you say you have a 9 to 5, correct?
Yeah. So
Yeah.
day trading would probably be my best option because I'd rather hold it throughout the day, but my time frames are never correct.
Oh, okay. So how long do you have? Like how many hours, or do you have an hour at least just to participate in the market?
So throughout the day I could check on my phone. It's just I can't chart. So let's say if I chart before I leave for work, that's 30 minutes, and then I could chart when I go on break, like at 10 or 11 o'clock. And just something I can hold throughout the day.
Okay. So if that's the case, and you're saying that you only have like a limited time just to to open the screen and chart, and then leave it open, or just mark out your levels, then that's again, that's fine, right? Because you can see that it's like, if that's the case, and you say you only have like some sort of 30 minutes or maybe at least 1 hour just to mark up and create some levels, right? Create some levels, meaning S&D zones, which is supply and demand zones, and then you can set some alerts, correct? And so that's just what you're doing at the moment, okay? And so
right.
Now when it comes down to this, it's really depending. I said you have to work your way up a little bit higher than upper time frame, and I'll say 30 minutes is fine on the time frame based off of it's like when you look at a chart. I would say 30 minutes fine because you can see the picture from this whole week really. Because what you would have to do is just pretty much just work with upper time frames because you don't have the ability to stay on these screens much longer or just long. And so again, that's fine, but you would have to approach it in some sort of day trade or a short-term swing. All right. And so you can't scalp, all right? You can't scalp because you would have to sit on these screens and just watch the whole market go being played out. Okay, that is one option. So it's just play with upper time frames. The second option is what you can do is you could trade through you could trade Forex, which is Forex currencies, and you could participate after work. Let's say if you want to participate in the Asian session, you can. And the Asian session ranges from 8 p.m. to 1 a.m. Eastern. And so I'm not sure if you have tried Forex or know anything about Forex, but yeah, that is one that is one option, or that's another option that you can take in. So yeah. How do you feel about Forex?
Honestly, what's going on is I work for the school district, so I'm a janitor. It's summertime, so this schedule that I'm on is temporary. Once school starts back, I'll be back to work at nights, and I can trade more in the morning. It's just, I don't have my job is not to the point where somebody's watching over me. So I'm able to get away, but I chart better on my laptop versus my phone. So I was just like, I'm starting to understand that the higher time frames are the most respected So if I could do something where, if I could, I think the time frame I try to use is 1 hour, 30 minutes, and then I will try to execute off the 15-minute time frame.
Mhm.
But what I should also mention is I have this with cash capital. So I'm so used to seeing you guys make so much money during the short time frame that I think I'm missing out. So I go look at the short time frame and it makes me jump out of my place earlier. Makes sense?
Yeah. Okay. All right. So yeah, when it comes down to things like that, I mean, it's really, you have to think about this as in, there's different ways to enter into different setups, or we could have honestly the same levels and the same setups, but we would have different targets. Why? Because maybe we might be on a different time frame, be targeting certain lows or targeting certain highs, and things like that. So again, it's like it really depends as in what time frame are you currently on, and since like the way that you're currently in, as in the current state that you're in, I would say that you only
Yeah.
have the chance to mark up at the morning and leave it just like that, and now you can just look on your phone or just trade on your phone or enter off your phone, and that's it. Okay. And so for today, let's just say, for example, this is a 1-minute chart, and this is SPY, which is, again, the S&P or QQQ, it could be either or. But let's just say if you go in a 30-minute time frame, you can see that, price, moves much more slower. And all this right here ranges from the 20th till today, which is 2 days, right? So 2 days of worth of just price action. And you can see that there is, lows, lower highs, lows, lower highs. And that right there is already a nice opportunity on or Tuesday, because Tuesday had a retracement into that supply zone. And all you're doing is confirming inside this area as in some sort of lower time frame, and trying to target the liquidity low, because that is what you're doing in here. Because you can see that everything that we go off of is structural breaks, the retest into a supply zone or demand zone. In this case, it's a supply zone, and we want to go short. That is what it is on this one. And so you can see how many times of a move it gave you that. You can see that right there occurred. This one here, that's one supply zone. And you can see that at the open, when you have chased that open, I mean, you can scalp that. But you can see that what happened, price just came right back up to the upside. And so what you would do is, after price made this whole impulse move to the downside, you can see what they leave behind, an imbalance. Are we going to trade the upside to the or that run up to the upside? Of course not. I mean, you can, but I would say no, because it's not really worth taking. And so since it's not worth taking, I would say that the moment that price hits this mark here, which is a supply zone, your alert will ring. And when your alert rings, now you have, let's say, this 30-minute time frame, you have from here to here 3 hours or 2.5 hours to 3 hours just to confirm that supply zone, just to see, do you want to swing this for the next morning, right? And so if you did take this trade on Tuesday, at the end of the day, where did price come back down into? This right here. And saw that low. And what you would do is already be taking profits, right? Actually, where we opened was right here, but it just gave you a nice sell-off to take out the liquidity off of this low. And that's already a +1 trade. And that ranged from, price range from here, 2.7, so 2.80 cent move, right? 2.8.
Is that a liquidity sweep right there where you just circled?
Yeah, it's a liquidity sweep, but again, it's like, even though that's a liquidity sweep, price just ran right back up even higher just to mitigate more orders, which is another imbalance right there. You see that? And so now, if you, let's just say if you didn't enter in the specific, supply area in here, or swung, then you would see that, okay, what made these lows? This push up before the push down again. And within that push down, you have some sort of supply zone, right? From this low to this high. And there you go. You can see that at the 50%, area, where is that supply zone? Right here. And there you go. You can see it in that case, there was some sort of confirmation here on a 1 minute, 2 minute, and all you're doing is just setting alerts here, and you're now taking this position to take it right back down to take out loads. You see that? So there's already what? +1 trades here, a +1 trade in here, but this one was a swing. And this one was a day trade. And that right there fits within, your schedule, because you're just working with 30-minute timeframes or an upper time frame. You're not on a 1 minute, 5 minute, or a second chart, because if you're on a 1 minute, 5 minute chart, all this will confuse you. All this will confuse you, right?
Right.
And so now it's like, set alerts, set it, forget it. And if it rings on your phone, you're now on your phone trying to confirm that supply zone. And so let's just say, let's go back into this area here, and let's go on a 1 minute. And let's just say, your time is, this is your time, and then you're just waiting for that confirmation. And for you to confirm is what? Is for you to look for the structural breaks of, the structure. So now if I go on a 2 minute, let's just say, okay, 1 minute, 2 minutes. If I'm looking at that run up, you have a break of a structure here, came right back down, made this new low, broke structure right there. So this low is what made this high, pretty much, right? And so now,
Right.
since this is the low that made this high, there you go. This is the push up before the downward move. But what was the actual specific area where banks bought in to sell, which is this area here, this push up, right? Because you can see that there is some sort of displacement, and I teach displacements inside the mentorship of my group, where price pushed up and then sold off, because now this is a specific area where we're interested in sells to look for, to expect a downside. But again, you're inside the supply zone, and we're trying to confirm that supply zone to go what? Short, right? And now throughout these, these times within a span of 20 to 30 minutes, all you're doing is trying to confirm and position yourself just to get up into these supply zones above here, right? Because now if I just put on a 50% here, look where that leaves me, at, which is a nice valid supply zone right in this area, which is this, the push up. And that's my entry right there. The moment that price taps into that area, I'm already going to enter just like that. Stop loss above here. And let me take it lower because I want to target these lows, more imbalanced than here. And now I can enjoy the whole rundown, right? And so now I can target all these equal lows, and I can, enjoy the rest of my, my day, because this is what? This is 2:56 p.m. And so there's like an hour left of the market open. So now if I put play, it just runs down. You see that? And there you go. Now
So
you can say,
you still use the 1 minute for the confirmation for entry?
it really depends as in what you see in here. And so it's like, what I tell my students or my members is that it really depends on you, on what time frame you use just to confirm, because maybe on a 1 minute, it won't show you any confirmation. If it doesn't show you any confirmation, then don't trade. But if it doesn't even show you in a 5 minute, 10 minute, or 15 minute, don't trade at all, right? But you can already see the structural shifts on the 1 minute here, which is getting broken. All you're doing is just dissecting the upper time frame into a lower time frame just to get much more of a detailed view on how price is being delivered and how money is coming in and out in this specific zone, right? In that zone. That is what you're doing. That is what your objective is to do, because you already have your structural break. You already have your POI, which is your point of interest, and you're just looking for that confirmation to take price lower, right? And that's it.
Right.
And so that right there was what, a 30-minute, outlook, or 30-minute, setup. And it ranged from what, the day before till today, or till yesterday. And there you go. That right there was a nice trade to take right back down to see new lows. And you would have been already done. And you already have what, potential +2 trades already right there. And you could be done for the week already, right? And so since that is, you know, a 1 minute time frame, let's go back on a 5 minute, look at that delivery, look at this delivery to the downside. It's a rinse, repeat, rinse, repeat. You just have to train your eyes to look for these setups. Okay. And so now if I just put this into, let's say, simple, regular short, just like that, price came back down, made a run up. All this is just some sort of, where was it, rundown. You can see that we have now a breakable structure here. Where is this low coming from? This low, it's coming from this push up, just like that, right? And so since that is the push up that we're looking for a downside, then you can still see that we're bearish from this lower low, lower high, lower low. And so we anticipate a whole sell-off, right? And so that right there is pretty much what I'm, I'm still trying to confirm, is this sell-off to see lower prices. And so in that case, today we had, winning trades in the overall market, but today was just pretty much nothing that you would have traded based off of, your schedule. Because based off one schedule, it really, depends as in, okay, is it a good day to, to trade, or is it not? Because maybe it is for me, because I could be on the screens and I could trade back and forth in these ranges. Unlike, let's just say you, because let's just say you have a time schedule, or, a business, or, a 9 to 5 or whatever it is, and you can't be on these screens as much. And so that is just where your system, has to change a bit, or you have to modify your system and see how can you approach the market. Okay, because you might not even see a trade all week, and that's fine. Or maybe you might just see one good trade, and that's all you needed within that one good trade, and you already made your week's work. All right, because again, it's like, if you find setups like this over and over and over again, you're gonna have a nice win rate within, when it comes down to the trading. And let's just say if you only made $18 from this high to this low, let's just say, for example, that's already a nice +1 trade. And let's just say you end the week just like that, you're already beating the 90% of these traders in this game, because the 90%, they could not end the week green, and they could end the week red, but you ended the week green. So who's doing better? Who's performing better? The person that that made $18, or the person that made a negative 2,000? The person that made $18, right? Because they just took what, one trade from here into here, because it gave them the nice SSC set. And that's it. But and now it's like, even if it's not $18, and let's just say, later down the line, you're developing as a trader and gaining the experience, then you would see that this $18 could be $500. Or not even that, it can be $5,000. And it's just off of this one setup, just one move. You're good with $5,000, right, for 1 week off of one trade? I am.
That's what I'm starting to learn, that I don't need multiple trades to get a big outcome during the day. If I have one trade and I tried it right, it works way better than versus me trading every 30 minutes.
Correct. And so you should say the less is more. The less you trade is actually more. And it's like, all you're doing, as within your schedule, you're just looking for A1 setups. That's it.
So the correct term that I'm looking for when I let's say you have a future session,
so it really depends on the time that that where the SSE gives you. As in, what time does it give you this on on the time frame that you're in? Because you might have this SSC setup, which is this near the end of the day. But it's now up to you, as if you want to participate here to swing this to take out this low. Or is it still in the morning and you can look for that and just set new lows. All you're doing is just setting alerts in here inside of a specific range to take price lower. And let's just say if you just took this and this, you're not worried about all this in here. Because what is this doing? It's just going back and forth,
Right.
back and forth, back and forth. And why are you going to stress yourself to do this?
But the news,
And
the
so
news
this,
don't affect my. I'm sorry.
no, go ahead. Sorry.
I was saying the news don't affect my charting.
You said the news?
The news,
Yeah, you
like
said
news that goes on throughout the day.
yeah, the news, correct? That's what you're
Yeah.
saying, news?
Yes.
Yeah, so news, I mean, I really don't really look at news, but it's good to be informed with the news. But what I'm doing here is just focusing on how prices be delivered. That's the most important thing here, is how prices be delivered. Because yesterday, I think Jerome Powell was speaking around 10 a.m., I think. And that right there, yeah, it just gave us a nice, a little run up, and then just started being choppy again. You see that? And so again, it doesn't really matter about what news is, because it's already what displayed in the market. And so it's up to you if you want to go off fundamentals. But for me, I don't really look at that. I just stay focused on whatever is pre-presented here. Because let's just say if I'm trading Amazon and Amazon goes bankrupt, and that is the news. And if they go bankrupt and Amazon still, give me a bullish bias and a bullish move, then I'm gonna still continue taking Amazon to the upside, right? And that's it. Or let's just say if Amazon, main headquarter, or let's just say multiple headquarters just went on fire and they just blew down. And so, if that's the case, I really don't, it doesn't really, matter to me, because if the market on Amazon or the stock on Amazon is, is bullish, then I'm gonna go bullish. If it's bearish, then let me go bearish. All you need to focus on is how, price is being presented at the time and how you're gonna go from point A to point B. That's it.
Okay, I get it.
So,
okay.
But yeah, and again, if you want to go, if you want to go off time frames, I mean not time frame, but news, then you can go off news. If not, then you don't have to. Okay, and so that's just me, right?
Okay, and then so the chart time frames you recommend for me to do?
So time frames, I would say higher time frame. See with the higher time frame and see on how you can connect your lower time frame to your higher time frame picture or image. A lot of mentorships and a lot of gurus fail to teach this, the connection between both. And they show you just a lower time frame, the higher time frame, and they tell you to look for this every single time. Or learn this, and it should appear here, and do whatever. But that's not what we do here in Bolt. What we do here, or the way that I teach, is how can you understand the higher time frame and seeing how this higher time frame presents on the lower time frame, and how that lower time frame is the steps that creates the higher time frame picture or the image. And so this is just what I go off of, based off of context, meaning that what's the overall picture and how you can dissect the picture. And it's like a book. And what I mean by book is like you're reading through the pages of this particular stock or this particular currency. And what is the bigger picture telling you? Is it a downtrend? Is it an uptrend? How can you create an overall bias around that to see which liquidity it wants to capture within the movement of structure, because that is just what we go off of here first, which is structure, how that structure narrative creates those S&D zones or the supply and demand zones, and how you can use those levels or those ranges to get you into higher prices or lower prices depending on whatever, range that you're currently holding or in a specific time frame. And so because you have some sort of something like this from a higher time frame, let's just say a daily is just showing like this, right? A bullish move. But now on a lower time frame, let's just say on a 1 hour, let's just say the red is a daily and the blue is a 1 hour, just like this. And that's what you're just gonna have. And let's just say that, June to November, that's what it was in a clear uptrend. But you can see how long did that took from June to November just to show you this. And so that is just where a lot of traders fail, as in how they can connect the dots from the lower time frame with the higher time frame. So you would have to pretty much just connect them both, and that is just what you do as a trader when you use these time frames. See on how price will be delivered at this given time or this given day, and how the banks or the smart money is buying and selling in this given day, week, month. Okay, because you can see that from June to November, it's quite a while. It's a couple months, right? And so now on lower time frames, you're now going from, okay, it went bullish. Oh, it went back to being bearish. Went back to being bearish again. Went bullish. Went bullish. Went bullish. But now from here, you're forgetting the whole picture as in what the overall move is. Because people just, or traders fall, just tend to, focus on lower time frames, and they forget what the bigger image is telling them. It's in an uptrend. And so now think about the blue. Think about the blue structure. Now think about even a lower time frame. And a lower time frame will look something like this. Like that. But now think about a lower time frame than the orange. So let's just say red. Oh, and actually we already did red. So let's do blue. More and more noise. More and more noise. And now you can see, if you view it in this format and just, try to look at structure, you're going to be lost. You're going to be overwhelmed. You're going to be confused. Because it's like, how can I look at this to connect with this, to connect with this, to connect with the overall move trend? You see that? That is where a lot of gurus fail to teach in this way. Because again, it's like each time frame has its own independent ranges, has its own story. But it's your task as a trader to see how can you connect this structure to correlate with this one, and that blue structure to connect with this one, and with that orange structure to connect with this red structure. Right? And so if I now, so now if I go on a daily time frame on SPY, this is just what it is. All right, so if I go from, or actually let's just go to monthly. On a monthly, it's just doing this. Higher high, higher low, higher high. Potential higher low, who knows, to take out this higher high, right?
Right.
And so let's just put a line from here to here. And that goes for, I think, the full year or a year and a half. Let me just confirm. They range from here to here. So it's just 306 days. So barely a year, right? So that right there was just barely a year of just a whole rundown, right? And so 306 days of just a pure downside. But now if I dissect the image from this high to this low, and again, you'll see it just like this. And now you're going to have something like this when I go on lower time frames. But a lot of traders would forget about this and focus on this. And now they're going to dive into deeper time frames, and they're going to forget the orange. But now if let's just say if I go into 1 hour, let's find that blue over that line. Where'd it go? Did it delete? I think it deleted. It didn't come with us, but you can see that it was just this. So now, it's good that we have this blue box. But now if I go in a 5 minute, or actually let's go on a 15. And if I go into that blue box range, and let's just say we delete everything and we didn't see anything in hindsight, right? And so now you have bullish, bullish, bearish, 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 bullish, bullish, bearish, 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 bullish, bearish, 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 still bearish, bullish, bullish, bearish, hit a supply zone, bearish, 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 bullish, higher high, higher low, higher high, bearish, 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 low, breaks the structure, bullish, 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 bearish, bullish, bullish, back to being bearish, bearish, bullish, 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 back down to being bearish, 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 temporarily bullish, bullish, bearish, 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 bullish, and so on and so forth. You see that? And that right there would confuse a lot of traders. Okay. And so this is why it's very important to know the overall context, because if I just go from a left to right and just, just not do all these red areas, and if I just mark out this low, this high that made this low, you can see that right there is what? The push up before the downward move, the push up before the downward move, the push up before the downward move. And there you go, right? And so now from there, push up, went bullish, went back down to being bearish. And now from there, it was just bearish inside of, multiple ranges, and that's just why you saw rejections, 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 and then a continuation up to the upside. And that's just where we're at the moment. So that is just what it was off of, that one line, just like that, right? So
right there.
what was it?
30
Your mic is breaking up. Your mic is breaking up. Your mic is still breaking up.
Hear me now? How about now?
I hear you better, I think. Try to say something.
Can you hear me now?
Yeah.
I was asking what time frame you started from before you got all that movement when you was marking it.
Oh, that would be on a higher time frame. Yeah, that would be on a higher time frame. So if I go back, that would be a higher time frame.
Like that.
Yeah, that would be a higher time frame. So that would be like an 8 hour.
So as you go lower, that's why I'm seeing so many candles all in, like maybe let's say 10 candlesticks. All this could be a possible 10 candlesticks movement.
Yeah, if I go on an upper time frame like a weekly, that could be just 10 candlesticks or 20. If I go on monthly, There you go, just a rundown. But you can see it's like, even though within this rundown, it's just coming right back down to potentially come right back up in the near future. Right, and that's just what it did, run right back up. And so if that's the case, then I could be in areas in here to see if this really wants to take out this high, because that is the overall objective. But if that fails, we would see this on lower timeframes. So this is why it's like everything, this is why, you know, it's not 100% guaranteed that we're going to take this out here.
Okay, I understand.
Okay.
Yeah.
And so this is why it's like I tell my students, don't view the market in the form of timeframes, view it in the form of how the orders are coming in. And that's all that matters. Because you can see these setups in here in every single time frame. Here, on a daily, on the 15 minute, 5 minute, and things like that. And they have a better understanding now on how price is being presented and how they can use whatever's being presented to either scalp, to day trade, and to swing, because they see it from a higher time frame into a lower time frame, and they combine the two. And this is just why other mentorships, they fail to teach it this way, because all they say, okay, look at the higher time frame and look at the lower time frame. And on the lower time frame, just look for this, and it's going to work out every single time. Because now it's like when it comes down to a lower time frame, and if I look for this, it goes up, but then it just falls right back down. Maybe this whole thing here is not a good idea, because maybe on an upper time frame, or in an upper time frame, it has its own independent range that gave me something like this, and I'm looking for buys. But this whole time it was bearish from this lower low, this lower high, and this lower low. And why am I looking for buys when this, you know, it's telling me that it's bearish? All you're doing is just buying it up, and you're being parts of the retail, right? Part of the retail, just because you saw higher high, higher low, higher high, higher low, S&D confirm, and there you go, just sells off. And so this is why we look at the upper time frame, how they bought in and they sold at the protected low, and now they just shifted price right back down to see lower prices. So this is why you look at both, and how are you trying to take the lower time frame and connect with the higher time frame ranges, or the upper time frame ranges. And this is why we filter out certain supply and demand zones, certain structure, and seeing if is it a right area for us to participate for today, or do I need to wait for, you know, next week? All right. And so that is just what it is at the moment. And you can see that at the moment here, we painted a, what was it? So we had it run down on 1 minute. So from left to right, you can see that. Think of this like actually like a daily time frame. You see on how this is a 1 minute, but think of this like a daily time frame. You can see where the market's headed to, from this low to this high, to this low, to this high, to this low. That is what it is. And all we're doing here is either to do this to come right back down, or this can just run right back up and just see more of an imbalance mitigation to see lower prices. But what I know and what structure is telling me is that we have a break here. That's one. A break here. That's two. And you can see that we had good supply zones. The moment that price made this low, we know that this whole run up was fake, because it was coming up to mitigate a supply zone from yesterday. And then from there, right? And from there, well, actually, that was not the run up. The run up was in here. That was from yesterday. And this is today. And so now you can see that based off of, you know, the open, buys, but it came into a specific supply zone. and then sold off. And we had this zone in this live zone, and that right there gave us a nice sell. And there you go, drop. Because it's like, even though that you're right about these moves, price can still run right back up and just see higher prices. Because I can't sit here and just tell you that, oh yeah, this broke, this is gonna hit this supply zone, and it's just gonna fall to the face of earth and just meet this, you know, new low. Because if that was the case, then I'll just be full porting my whole position just to take this out, because it's guaranteed. No, nothing's guaranteed in here. What it is what structure is giving me and how I can apply my supply zone that caused this low. And there was a nice sell in here to take it low, a nice sell in here to take it low. But even though the price just runs right back up, that's fine. It's part of the game. Because all you do here is look for this drop, retest into a supply zone, and then fall right back down. But I know there's Vault members in my group that they were looking for buys in here. And we looked for buys in here, and they were successful doing that. But I told them that watch out for a supply zone that we had in here, because this can either tap back down into this demand zone and then run back up higher. But in that case, look at this, it ran up higher and then it just dropped like that. And that right there is what structure shifted there. And this low, it's coming from what? This push up before the downward move, and that's just where we are currently trying to sell at. And that is what it is. And so for this one, you had a break here, that's one. You had a little break in here, and now you had a break of structure in here. This low is coming from a supply zone in here. Now you have a higher high, equal lows, run up, and this could just see a flush to the downside in the next few minutes, or maybe later today, who knows? And that is just what we anticipate to see a drop to take out this low, pretty much. But you know the ranges, you know the structure, you see where price is flowing to, and you know which liquidity, or most likely which liquidity, which is, you know, is going to capture, pretty much, because we use liquidity as the last step, which is part of the confirmation, as a confluence to see where, you know, price could potentially, again, potentially head to. Okay, and so that right there is just what it was on this, and yeah, so we could be right about that and just see a full flush to the downside. That would be great. That would be awesome for the ones that are inputs right now. Or this can just run right back up and just see deeper mitigations. So that is just why we play with multiple timeframes, to see on how structure is shifted, how we're looking for supply zone rejections, and that is just what it is, a push up with a downward move. And you see wicks, 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 wicks. I'm still not getting that nice sell-off that I'm looking for. But that is just why we go on lower time frames to open up those candlesticks and seeing how can I read the story behind that. We are story readers.
Okay.
All right.
Yeah.
But yeah, any questions?
Yeah, one last question. When I hear you say something about this wick has to be taken out, does it get taken out by another wick or a full candle?
What was the question again? You said a body break, or?
I'm sorry.
What was the question again? It kind of broke up.
Oh, I was asking, how does the wick get taken out?
Oh, so how does the wick get taken out?
Yes.
So the wick can get taken out by any, you know, move up or move down, because you can see that if you have these lows here, you see on how they were just, you know, equal lows or just equal wicks. You saw how price just came back down yesterday, and it just came right back up. And these lows here has been taken out because structure had just had a downward move, and all this is just intermediary structure, which is fake structure. That is just why you saw it. Another impulse move to the downside, and these lows has been taken out, because who's buying all this intermediary structure? Dumb SMC, retail, FOMO traders, and they're just trying to get into that move up because maybe they're trying to hit these supply zones. And what happened? Price just gave them another run down. And all these buyers are buying this up because you can see that every candle here is either a buy candle or a sell candle. But what do you see from yesterday? Buy, buy, buy. And then what happened, after hours? Sell. And they woke up in a negative position. And that is how those lows has been taken out, or that wick has been taken out. Okay. And so that is just what it is when it comes down to that, because every high and low at any given time can be taken out. It can be the same day, it can be the next week, it can be the next hour, right? Whatever. But you can see that there was a high and a low in here. Look at this. This high has been taken out, and it makes sense. And there was traders in here trading that liquidity grab to take price lower. That right there was a nice trade. There is another area here as well, which is a break here. And you can see that right there is, a support line or just a low. And there's traders are in here trying to participate in that run up, trying to mitigate the supply zone, came up, which is this bullish candle, came back down, came up one more time, took out the liquidity, and then sold off. And that right there is a wick taking the previous wick to potentially see this fall off. And now what we're looking for here is a sell-off to take out this low, which is that wick. But again, it's like that is not, that is not the main focus here. The main focus is how the structure is being presented at the moment and how are we holding those areas, because this here can just see a sell-off and this whole thing gets broken, and now we have a long-term bias that we can go for to tap into something deeper. Because you can still see that this high, it's still pretty much being supported by this low. But you can see that what does it form? Some sort of equal low. So there's a high chance that price can just break through. Okay.
So you wasn't necessarily worried about the wick going up and taking out. I mean, you wasn't necessarily worried about it going up and taking out those other wicks that's above the wick you was just pointing at.
No, because I know that based off of what I see here, if I'm looking into here, this is what I teach as an inside my mentorship is where price displaced up. This is a displacement. The body closed above, taking out the liquidity off of this area here. This is the last area where banks bought in before they sold off again. And that right there is a break of a structure right there. And so now today it came right back up into that supply zone. And now what we're looking for is a sell-off to take out what? These equal lows. And you can see right now at the moment, it's selling off. And if I go in 1 minute, there you go. Look at that sell-off. You see that?
Oh yeah. Okay.
Yeah, and there you go. And so that's just where students are, are doing at the moment. It's just looking for those drops. It's just these supply zones. And so this right here is liquidity, and now they're in the green on this move. So yeah.
Oh, okay. Yeah. That's all the questions I had. This helps a lot.
Yeah, no problem. And so again, it's like there's it's more about this, but again, it's like use what what's in the public YouTube channel. I speak a little bit about this. Oops. So that was a nice drop.
Okay.
That was a nice drop. That was a crazy drop. But yeah, that right there just went parabolic. But it makes sense though, and we're not confused on why. Okay, because what I teach again is from higher time frame structure and the lower time frame structure, and how you can connect both of them to create your overall bias. And that bias will create your SSC setup on the time frame that you're looking at. And within that time frame, it's gonna show you as in, is there a good time to day trade, swing, or scalp? Look at that sell-off. Yep. And so, but yeah, everybody's just been killing it lately inside the group. So let me just delete this though. But yeah, any questions though?
No, that's it.
All right, cool. But yeah, if you have any other questions, you know where to reach me at. If you have my email, you can add my Discord as well. If you want to copy that, it's right here. RZ # 6959. All right, and you can add me as a friend, and I'll accept you. And if you have any other questions, then you know you can send me a message at any given time.
All right, thanks for your time, and I really appreciate you taking the time out to teach me this stuff.
Yeah, no problem. You know, again, I do this and just to take notes as in, you know, where you know, one is at, and you know how or where they're positioned, you know, based off of what they learn from or where they're learning from. And I take these notes and just to see on how I can improve within my mentoring and my teaching. And so it's like a win-win. Okay. And so yeah. Thank you for your time though.
Okay, this is a good side.
Yeah. Thank you for your time though. And again, if you have any questions, feel free to shoot me a message at any given time, and you can shoot me a message in Telegram as well, I believe. Okay.
All right, thanks.
Yeah, no problem. You have a blessed week. Okay.
You too.
All right. Thank you.